Hello everyone, welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 7th of June, 2023. Alright everyone, let's get into it. So obviously the biggest news or the talk of the town over the last 24 hours has been the continuing conversation around the SEC's actions against not only Binance but of course Coinbase. And the funny thing is I've seen more people talk about the action against Coinbase than Binance, and I don't know exactly the reason for that, but I can kind of speculate a little bit that people consider Coinbase to be a much more legitimate exchange than Binance. Obviously Coinbase is based in the US, so it hits home a lot harder for a lot of people, and also the cases are distinctly different, I think, and it's a little bit harder to defend Binance, not against the securities trading charges, but against some of the other charges that make it look obvious that they were doing things that they knew that they shouldn't have. But with Coinbase, I believe the lawsuit is only over the securities, or I guess like the assets that the SEC are claiming as securities being traded on Coinbase, and also Coinbase's staking products, which comes as no surprise since the SEC already went after Kraken about their staking product, but Coinbase has opted to fight all of this instead of just basically, throwing in the towel. Essentially. And honestly, I don't blame Kraken for throwing in the towel, because this fight is not something for the faint-hearted. It is not going to be cheap, that's for sure. It is going to be long and drawn out, and it's going to require pretty much a lot of work and effort on Coinbase's part to make sure that they can both defend themselves and defend the industry at large. Because what we're witnessing right now is basically the battleground of what's to come, right? What's to come, not only for crypto as it exists in the US, but just regulations generally, and the things that are put in place now, the regulations, the laws, the legislation that's put in place now will have impacts for decades to come. So we want to make sure that we get it right. And it really means that crypto is maturing, I think, as well, because it's become part of the mainstream conversation. It means our industry is getting a lot more scrutiny, of course, but with scrutiny comes with it the opportunity to work within these frameworks, or at least to try and create new frameworks, which is especially what we want to see happen with the SEC in order to move the crypto industry forward. Now, of course, this wasn't ever going to be easy. There is a lot of pushback here, especially from Gary Gensler, who I would label an enemy of crypto at this point, because he went on air. I don't know what station it was or what channel it was. It may have been CNBC or something like that. But he went on air and he basically said that we don't need more crypto. And it's like, well, okay, who's we here, Gary? Like, who are you speaking for right now? Because literally no one I know in crypto, except maybe the BTC maxis, right, are saying that we don't need more crypto. I think that really they're the only ones. So are you speaking for just the BTC maxis and yourself? Are you speaking on behalf of the whole SEC, or are you speaking in a personal capacity? Because really I feel like Gary Gensler is definitely on the minority side of things when you're looking at the crypto industry in terms of what they actually want. And also, he shouldn't be allowed to, or shouldn't even really be saying stuff like that, because at the end of the day, he works at the SEC. He ultimately works for the American people, even if he doesn't act like he does, right? And he should be looking after the best interests of the American people, which he's not doing, right? Well, at least from my point of view, he's definitely not doing. So for him to say, we don't need more crypto assets, it's not him trying to say that we're going to regulate them, we're going to make sure that they abide by the rules. It's basically him saying that he wants to ban them. Really, that's what I take from it, and that's essentially what I think he's trying to do. Now, of course, I don't believe he's going to be successful. Thankfully, the US is not a dictatorship. It's not like Gary Gensler sits at the helm and dictates what people can and can't do. There are checks and balances in place. There are courts, and for better or worse, a lot of the US political system runs on donations, as they like to call them. But we all know they aren't they aren't donations in the literal sense. There's another word for it, but I'll let you kind of think of that. But essentially, yeah, I mean, the more money you have, the better chance you have. And that's exactly what Coinbase has. Coinbase has a lot of money. They have a lot of public support. They have a lot of people in their corner of the arena now, and they're ready to fight. They're not ready to cave or to throw in the towel. They are ready to fight, and to fight to the fullest extent of the law, and to hopefully get some positive things happening around this. Now, Brian Armstrong, of course, the co-founder and CEO of Coinbase, put out a tweet today talking about the SEC complaint, and he said, remember, and these are the 4 key points he brought up, the SEC reviewed our business and allowed us to become a public company in 2021. There is no path to come in and register. We tried repeatedly, so we don't list securities. We reject the vast majority of assets we review. The SEC and CFTC have made conflicting statements and don't even agree on what is a security and what is a commodity. This is why the US Congress is introducing new legislation to fix the situation, and the rest of the world is moving to put clear rules in place to support this technology. And then Brian continued and said, instead of publishing a clear rulebook, the SEC has taken a regulation by enforcement approach that is harming America. So if we need to avail ourselves of the courts to get clarity, so be it. By the way, in case it's not obvious, the Coinbase suit is very different from others out there. The complaint filed against Coinbase is exclusively focused on what is or is not a security, and we are confident in our facts and the law. So those 4 points I think are really salient. It really is kind of insane that the SEC would approve Coinbase to go public, even if there was some discussion about how they put in a clause there saying that this doesn't mean that Coinbase wasn't trading securities or something like that. I still think it's insane. There is no path to come in and register, and that hasn't only been said by Coinbase, but by multiple parties in the crypto ecosystem, especially parties that aren't just in the crypto ecosystem. But Robinhood Crypto, one of the executives, I believe, that works there, basically gave a statement saying that they worked at the SEC for a long time to try and get, approvals for things and work within a regulatory framework, and the SEC ended up just stonewalling them. The SEC and CFTC having differing opinions on things is obviously not great, and obviously the US Congress is now introducing new legislation to address all of this, and that's the bill I covered the other day. And there was also a video that the Coinbase account put out here around the numbers of what's happening with this. So basically, this is a really to-the-point 40-second video that basically lists what they've done. So you can see here, they say Coinbase by the numbers, and they say the number of times we mentioned staking in our public S1 report, 57. Times we met with the SEC in 2022 asking for guidance, 30. Percentage of assets we reject because they don't pass legal standards, 90%. The year the test was written that the SEC uses to determine if tokens are securities, 1946. And tech jobs at risk of being driven offshore are 1 million. Countries currently establishing comprehensive rules for crypto, 33. And comprehensive rules that the SEC has established for crypto in America is 0. So yeah, and then they say update the system, keeping in theme with their update the system thing that they've been doing for the last few months. And I think this is just a really impactful video. It got a lot of views, 1.8 million views here, got a lot of attention, and 40 seconds. So for those people with very short attention spans, which seems to be a growing number of people on the internet these days, this is the perfect video for you. So yeah, I guess that's mostly the latest stuff that's happened, really just responses from Coinbase. Paul Grewal, the chief legal officer of Coinbase, actually went on Bankless with David Hoffman, spent around 25 minutes talking through this, and I believe that there's going to be more stuff coming out around this. But really what's been the funniest thing to see actually has been the market reaction. The market, I think, at time of recording has erased, at least on ETH and BTC, has erased all of the dump that happened from when the SEC announced that they were going after Binance. And I've said it before and I'll say it again, guys, when you're in the time-based capitulation part of a market, you have this crab-style action where essentially the bad news doesn't really move the market anymore. Yes, there are opportunistic traders and short-term people, but really, at the end of the day, the market is not in a spot right now where bad news is going to nuke the market in any significant way. And on the other side, good news is probably not going to pump the market in any significant way. I mean, the withdrawal thing, right, where withdrawals went live and then ETH pumped a bit, that was a short-term opportunistic thing. Like ETH pumped to what, 2,100 or something like that after withdrawals. That was literally just traders taking advantage of a narrative, and then ETH just went back to where it was just before withdrawals went live. That's because good or bad news, it doesn't matter at this point in time. The crab wants what the crab wants, and it wants to continue. So it's going to continue for quite some time as we go through this time-based capitulation. We could visit lower from here. We could go higher from here. But as I said, there is a defined range right now, a long-term range of between 1,000 and 2,500 that I'm kind of keeping my eye on. And if we break that in any significant way in either direction, so if we go under 1,000 again and then we just sit under there and we don't bounce really hard from there, that's when I'd start getting pretty concerned. And if we go over 2,500 and we stay above it, that's when I'd start getting pretty excited, right? Because it could be a potential new bull market happening. But I don't believe the ETH is going to go under 1,000 and sit there. I don't believe that to be a realistic scenario. I don't really believe it's going to get near that unless something like really bad happens. happens, like another black swan, like what we had with the COVID dump in 2020, and then getting above 2,500 again, it's going to take a while. We might just get above it, everyone gets really excited, and then everyone just gets liquidated and we go back down. These things happen. So as I said before, I'm not expecting any fireworks until probably next year at this point, but enough market talk. Just a last little tweet, 3 tweets here from Tongvai Lee, who used to work at the SEC, I believe, put out a tweet that said, "Let's be clear, the SEC complaint doesn't mention this, but there is currently no way for a platform like Coinbase to register as a securities exchange, broker, or clearing agent. That's why they've been begging the SEC for years to give them a path to compliance." And this just reinforces what Brian was saying, and it really is insane because, you know, the funny thing is that if Coinbase could register as an exchange that was allowed to trade securities, you could actually basically say, okay, well, these things are securities, and then Coinbase could be like, okay, they're securities, but we're still going to trade them. Because at the end of the day, being a security shouldn't be viewed as a negative. It shouldn't be viewed as something that is negative for the assets. The biggest assets in the world, or some of the biggest assets in the world, are securities. I mean, the biggest company in the world, Apple, is publicly traded, right? They have a security, a share, and obviously there are different obligations when you are actually a security. You have to do like financial reports, you have to abide by certain regulations and such. But I think a lot of crypto projects could do that. If they have a centralized team behind it, they could put the financials out there for their token holders, and that's it. And then eventually, if they want to decentralize and they want to become more of a community-oriented project, that could potentially, their token could potentially become a commodity and just move away from being a security, because they don't actually want to be that centralized point of control there. But yeah, currently there's no way for Coinbase to go in and register as that. So yeah, just another thing reinforcing all of that there. But anyway, moving on from the regulatory stuff onto some updates on the tech side. So first up, the Optimism, a mainnet upgrade Bedrock that I've been talking about for a long time now, has concluded, and the Bedrock sequencer has started up. So and this was at I think like 16 hours ago now, something like that. So it seems like the Optimism network is well and truly upgraded to Bedrock, chugging along nicely. I was using it just before for a little bit, and everything seems fine. I kind of don't have anything to compare the fees against, to be honest, because I'm not like a super active user where I'm on there all the time just making transactions so that I can compare the fees. And as I said, these L2's fees are actually also influenced by L1. So obviously when the L1 fees are higher, so too will be the L2's, at least until 4844. But there is a website you can use called l2fees.info. Again, not totally sure how accurate this is to show the cost of things. Right now it says that sending ETH on Optimism is about 4 cents, swapping tokens is about 9 cents, and the layer 1 gas fees are quite cheap right now at 19 Gwei. I wonder if they have like a historical view here. Let me have a look in. No, they don't seem to have a historical view here of fees on l2fees.info, but these are the kind of current fees here that you can see, as opposed to the Ethereum mainnet, where it's almost $1 to send ETH and over $4 to do a swap transaction. But as I said, not totally sure how accurate this is, and you can test it out for yourself, I guess. But yeah, Bedrock is still a major upgrade. There have been multiple posts for them explaining essentially what Bedrock is, what it brings with it, not just the cheaper fees, but also better infrastructure, better tooling, better things for people to use when building things with the OP stack. And what's really exciting, at least for me, is the ability to potentially, I don't know if it's enabled yet, or if it's something that is being focused on yet, but I do know it was included with the Bedrock upgrade, the ability to use validity proofs instead of fraud proofs. Now, for those of you who don't know what that is, fraud proofs is basically the system that optimistic rollups use in order to catch fraud. So in order to catch someone trying to do an irregular state transition on the L2 network, or on the rollup, I should say, on the optimistic rollup. Whereas validity proofs are used within ZK rollups, and they're not... It's not okay, there's actually an analogy I can use here to explain this a bit better. So it's not like a fraud proof where essentially fraud proofs are used after the fact. So you're basically assuming that the network is always working normally. No one's trying to abuse the network. Everything's working as it is intended. And then if something happens where essentially someone's trying to do fraud, you have to prove that via fraud proofs. And there's different games that are played with these things and different constructions of this. Arbitrum has their own implementation of it. Optimism does too with Canon, which isn't live yet, but they've been working on it for quite a while. And then with a ZK rollup, instead of assuming that everything's going well, they just basically post the proof, the validity proof to mainnet whenever it's whenever it's posted. I mean, some ZK rollups do it faster than others, and then it's sealed and always well and good there. So that eliminates the need for like that 7-day withdrawal window or a long withdrawal window that optimistic rollups tend to have, but it does make it a bit more expensive. So that's the kind of analogy to think about here. But yeah, congrats to Optimism on a successful Bedrock upgrade. I'm looking forward to seeing how people build out this build out more, I guess, like infrastructure using the OP stack as well. All right, speaking of Arbitrum, there was an economic analysis done of time boost transaction ordering a policy here on the Arbitrum forum, so you can go check this out. I'll link it in the YouTube description below. But I believe this was around the topic of sequencer decentralization and things like MEV at the L2s and how we can make it fair for different sequences and how we can essentially ensure that the negative parts and negative kind of externalities of MEV on layer 1 don't get replicated on L2, because at the end of the day, like MEV affects any kind of ordering within blocks. Doesn't matter if it's at L1, L2, L3 side chains, wherever an ordering of transactions is controlled by a sequencer or by a validator, whoever else, there is going to be people that want to take advantage of this in order to extract profits from it. Now, obviously, we have a lot of different solutions currently being researched and developed for Ethereum L1, and those can actually be applied to L2 as well, but it seems that the L2 research communities are doing their own kind of research on these sorts of things and suggesting their own things, which could also be ported to L1, mind you, as well. So you can go check this out for yourself. I'll link it in the YouTube description below. All right, so speaking of L2s, the other week, someone in the Daily Gwei Discord channel came along and posted a new website called growthepie.xyz that they and their team had been working on, which basically tracks a bunch of metrics around layer 2s. So you can see here on the front page, you have the layer 2 user base as the first metric. Now, this is obviously based on the number of unique addresses interacting with one or multiple L2s in a given week. Obviously, each user can have, or each human can have multiple addresses. So it's not like there are 2 million unique users of these L2s right now, which is kind of bullish, I guess, in a way. But this shows kind of the number of unique addresses interacting with one or two, or one or multiple L2s, and you can see it's basically up only. So this is total users across all the L2s that they monitor. Then you can go to users per chain, and you can see each of the chains here. So I'll just go to the latest data. Arbitrum and ZK Sync Error are leading, and then you've got under that Optimism, Immutable X, and Polygon ZK AVM here. Now, sometimes I explained this the other day, but taking this data with a grain of salt is sometimes prudent, because you can see here ZK Sync Error almost has 800,000 users. I think a lot of those people are farming the airdrop because ZK Sync doesn't have a token yet. Obviously, Arbitrum has a token, so there's not really any of that going on. Same with Optimism, and same with Immutable X, and same with Polygon. So ZK Sync stands out right now as the one without the token, so I feel like there's a lot of airdrop farmers going on there. But still, I mean, growth is growth, right? And then you've got like a percentage stacked chart here, and you can scroll down and see a bunch of different ways of displaying this data with a bunch of FAQs. Then they've got some different sections. So they've got like a fundamentals section where they're tracking things like transaction count, total value locked, fees paid by users, stablecoin market cap on these L2s. So they're basically doing a more comprehensive version of L2 Beat in terms of metrics. L2 Beat's great, but I think L2 Beat's strength is really in all of the information they have on there about the various L2s, like the risk framework they have, details about how the L2s handle things like fraud proofs or validity proofs, and what their current construction looks like. Like, is it centralized? It's got training wheels, all that sorts of stuff. So it's great to see that there's another analytics site coming in to kind of fill that gap here. And then you can go, as I said, like stablecoin market cap, which shows the market cap of different stablecoins on different L2s. And then single chains, they're also tracking Ethereum L1 by the looks of things as well, which is pretty cool. But you can see here, you can just sort by single chain. So you can sort by Arbitrum 1 and see the TVL, transaction count, daily active addresses, stablecoin market cap, and fees paid by users at a glance, which is great to see. And then there's also a wiki as well that they've got here, which is a documentation section where it seems like they're going to be breaking down exactly how these metrics work and how they're defined here and how they're calculated, which is obviously very important to make sure people don't look at these metrics and get the wrong idea. And they also have an API as well as a contributors section. So yeah, kudos to the Grow the Pie team for building this out. Obviously early days for them since it's new. I'm sure they're going to be adding a lot more metrics and a lot more features to the site over time. You can check it out. I'll link it in the YouTube description below, but you can also just go to growthepie.xyz as well. But as I've said multiple times on the refill before, I really want to be clear about the fact that when looking at metrics like this, you really have to take a lot of them with a grain of salt. You have to add context to them. Because the classic example of this, and I didn't mention this the other day, but back in, I think, 2018, EOS launched and they were bragging about having like millions and millions of transactions a day or something. But the thing is, they were measuring transactions differently to the way Ethereum measures it. They basically didn't really, they basically acted like Solana acts today, where they're doing everything on the L1. They didn't really have a small gas limit. The hardware requirements were huge. It was very centralized, and it didn't really equal the same as it did with Ethereum, and it was really just junk. It was a very weird way of measuring transactions, and obviously, as we all know, EOS is very irrelevant now, and no one really cares about it. So I will reiterate the fact again that the only metric that I really trust is fees paid, and it has to be a long-term thing. I think fees paid in a bull market is more noise than signal, because people are willing to pay fees if there's some kind of incentive program going on and it's a bull market and all this money sloshing around. But in a bear market where there's not that much money sloshing around, and where it's been consistent for a long time, like it has with Ethereum L1, that is a clear signal that the chain obviously has activity, has a use case, has demand, has product market fit. Some of these L2s are doing it right now, but also in saying that, the L2 fees are going to drop a lot when 4844 drops, their total fees as well as the individual fees. But obviously the total fees will continue ramping up as more and more people use the networks, as it becomes a bigger aggregate, but for each individual user, it will be less and less. And, I looked at the fundamentals here before, and you can see feed pays by users per L2, and you can see what it looks like here. Now, there is a lot of fees being paid on Arbitrum, obviously, all the time. It's been pretty consistent. Same with Optimism and ZK Sync Error. They're pretty high here. Again, though, like, I'm not trying to FUD ZK Sync here. I'm an investor in them, but I look at the engagement. I've done a lot of my own research on this, and a lot of it does just for reality of the situation look like airdrop farming to me, even if they're paying the fees. Because if you're expecting some kind of big airdrop and you're doing like a comp, say you think that, okay, ZK Sync is going, the ZK Sync token is going to be worth $5 billion fully diluted value. This is the percentage of tokens that are going to be airdropped. So if I'm able to farm such and such amount, this is the expected value that I'll be able to get. So this is the fees that I'm probably comfortable paying. In saying that, I'm sure there is a bunch of organic and legit activity. Not legit. I mean, for airdrop farming isn't necessarily not legit, but I guess organic activity happening on ZK Sync Era. There are a lot of exciting projects launching there. There's a lot of excitement about them. But I do look at this and I think to myself, let's see how this plays out after the token is issued, right? Because that's what I look at with all of these things. And I think in terms of consistency, Arbitrum seems to have been the most consistent here, and also being most consistently growing. But yeah, as I was saying, the only real metric that I kind of look at over the long term to look at, so you can look at all the metrics in aggregate and kind of paint a picture, but in terms of a metric in a vacuum, really fees paid would be the only one, to be honest. And there's also nuance here as well. I'm going to end soon. Sorry, I'm going on a little bit of a rant here, but there is nuance here as well, because who are the fees being paid to? Because if the fees are being paid to a centralized party that doesn't need to, that runs the validators, right, then they're just paying themselves. Whereas with the fees on these L2s, they have to pay Ethereum L1, and the Ethereum L1 fees, most of them are burnt. So you can say that most of this fee revenue, at least, is legitimate, is not faked. Whereas on other chains out there, maybe they're like super centralized and the creators behind them are just very shady and say, okay, well, we're just going to inflate the fee revenue because it makes it look good. Well, then they're just paying themselves, so they're not actually losing any money here to do this. So it's just it's basically a marketing cost, right? So yeah, there's nuance in every metric, so that's why you shouldn't ever take any metric in like a vacuum and just on its face value, fee revenue included. But I think fee revenue over the longer term is definitely a pretty high signal metric. But yeah, anyway, you can go check out growthepie.xyz for yourself. I'll link it in the YouTube description below. All right, last up here, we have a tweet from Nick Johnson, who is the lead developer of ENS, tweeting out saying, "So excited this is now public." So what he's talking about is something called My.Box. And he says, ".box will be the first blockchain native DNS-routable TLD, and it's enabled via ENS. All registrations and transfers will be on-chain, and the owner of the NFT will own both the DNS and ENS name." So this is very, very cool. You can see it's counting down to public availability here, which is still quite a while away. It's 127 days away here, but essentially what this is trying to do is make Web3 domains work on Web2. So essentially you'll be able to go to this .box domain, so ETH.box or Ethereum.box or Sassel.box instead of I guess like .eth, and then you'd be able to see a website that's hosted on there and do all kinds of like Web3 stuff, which is very, very cool to see there. So I guess just a reveal from Nick today. There doesn't seem to be that much info on the page. You can apply for early access if you would like to do that, which is there's an early access form here. You can of course follow them on Twitter and contact them to learn more as well. I'm going to quickly follow them on Twitter there because this is stuff that's interesting to me, of course. And this definitely fits into like the Web3 part of crypto and the kind of decentralizing the web part of crypto. And I was actually having a conversation with a friend today around decentralization of the web, because I don't know how many of you have been paying attention, but right now there are two major platforms on the internet that are trying to kill a lot of their user base without realizing that they're killing a lot of their user base. So Reddit in particular has raised the cost of API access to just a ridiculous amount that it's actually made having third-party apps talk to Reddit be infeasible, so or be uneconomical. So essentially what Reddit is trying to do is that they're trying to kick third-party apps off of the platform and funnel everyone into their own app. And they're doing this because on their own app they can show you more ads. They're going public soon. They want to make their financials look good. But the problem is that Reddit's own app, right? Reddit's official app is horrible. I've used it and it's absolutely horrible. My main Reddit app that I use on my phone is called Apollo. It's I think it's only on iOS. But it's amazing in so many different ways. But the official Reddit app is absolutely horrible, not just because of the extra ads, but because the interface is just shockingly bad. The interface seems engineered to be as unfriendly to the user as possible and as friendly to ads as possible and to marketing as possible, which is just crazy, right? But that's the way of the internet. And there was another thing that came out today about Twitch, which basically I think Twitch is limiting how users can monetize, and they're going to be making it so that only the maximum 3% of the window view or the video view can be used for ad space. Now, for those of you who don't know how people make money on Twitch, most of their revenue comes from ads and from sponsorships on Twitch itself, not from the subscriptions. And that's obviously not going to be great for the smaller creators on the platform there. So a lot of kind of anti-competitive and anti-consumer stuff going on with these major platforms on the internet today. And that's what I was talking to my friend about, basically saying, I think crypto actually plays a role here because it's not going to happen anytime soon, but the way you defend against these things is ensuring that no one has centralized access to, I guess, the state of the network, right? Essentially the database. So you could imagine that the Reddit network is the database. It's all the posts, it's all the comments, it's all the upvotes and all the profiles and things like that. Now imagine all of that lived on some decentralized alternative. But obviously it doesn't have to be like Ethereum L1. It can literally be like a Validium, for example, like a really cheap thing where it's not super decentralized, but everyone has access to that open state, to that open database. And then multiple different parties or entities around the world could build interfaces for that and all get to talk to the same database. Because right now you're only able to talk to the Reddit database via APIs because they let you, but they're jacking up the prices to a ridiculous amount to effectively not ban you, but essentially kick you out from being able to do that. that. And Twitter did the same thing. Twitter had the open API access. There were plenty of third-party Twitter apps, and then they killed it. Facebook is famous for doing this a long time ago now, and it was all because they wanted people to use their official apps for monetization reasons, right? And it's very anti-consumer. So in a world where we have the infrastructure and the technology in place to be able to make it so that the state of the database is open source, essentially, or open to everyone, and decentralized, and is still privacy preserving through the use of technology like zero knowledge proofs and stuff like that. And we could build, and then it's just like an open API for everyone to tap into. We could have a alternative to these current centralized mega monopolies that we have on the internet today. And a lot of people don't know this, I think, or aren't aware of this, but the internet was always envisioned as being this decentralized thing. It was never envisioned as being what it ended up being. And I think that with the technology that we have with crypto now, we can actually get to that original vision, but it's going to take quite a while. It probably will take decades, but I do think crypto has a role to play there. And something like My.Box is definitely a small but important piece of that puzzle. Anyway, on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.